Hello, trying this again. Hi there, I see somebody here, at least one person. Welcome or welcome back. I'm not sure when you popped in. Great, sounds like my audio is way better, which is great. That's good to hear. Okay, great. Well, thanks everybody for joining. Really appreciate you taking the time to be here this evening, this afternoon, or this morning, depending on where you're chiming in from. Just wanted to introduce myself quickly. My name is Ace Saint Germain, and I am the CEO for Beyond Frames Entertainment, which is a XR focused games publisher here in Stockholm, Sweden. Just a quick background on me. For prior to becoming the CEO for Beyond Frames, for the last 17 years, I've worn various hats in games, entertainment, and media, primarily in the U.S. market, but some global initiatives as well. And as part of those, I was mostly in business development, operations, and in product development, getting an opportunity to really do a lot of great work with the gaming community and the audiences at large who consumed a lot of the products that I worked on at companies like Future, at Twitter, and then as the head of content programming at Twitch. So very happy to be here today. So moving on, see if I could share my slides here more openly. Here we are. So who is Beyond Frames? Just a quick one. We are an XR focused games publisher, as mentioned, and our focus is to be the market leader by filling in the industry's content gap. And for those of you unfamiliar with some of the terminology, XR means extended reality, which covers the bases of virtual reality, augmented reality, and mixed reality, which you may have been hearing a lot about lately from places like Meta with their metaverse initiatives and everything else like that. So the big question is, though, why exactly would we care about the industry content gap? Well, as mentioned, consumer tech brands that we use today, again, the very one that you're probably the devices you're using today to even watch this live stream, are investing really big into the category. According to PwC, VR is going to be the fastest growing content segment in now and the near future. Meta is spending at least $10 billion a year on its growth. ByteDance, their primary competitor today with TikTok, is has their own VR headset in the market and looking to go head to head with Meta. Additionally, Apple is still trying to maintain their stronghold as the device owners for the future of consumer tech. So again, everything you love and use today from a brand perspective is looking to move into this space as well. And so all this fervor has really led to an accelerated consumer adoption. So the estimates on the left here, as you see, the 14.8 million units sold in the very beginning of this year, effectively surpasses the amount of Xbox Series X, the newest generation of Xboxes in the market. And then if you start including additional headsets, it's not difficult to believe that the Meta Quest alone, but in VR generally, is either the second or third largest gaming console in the marketplace. And that's obviously very important because it's made VR games an extremely lucrative business. Some recent numbers that were shared: Beat Saber, probably the top game in the market for the longest time, made 100 million US dollars in revenue last year alone on one device. And Meta most recently shared the numbers that 55 of their titles have made over $5 million, with over 30% of the titles making at least $1 million in revenue on the store, with 33 of them actually making over $10 million. So again, the ability for people to make money in the space is quite significant, and also shows the consumer adoption and how much interest there is there. But then one of the biggest issues is that content is fairly limited. So the MetaQuest store, again, this is the app store that's used to be able to purchase games inside the MetaQuest headset. They are currently the majority market shareholder. There are roughly 400 titles in the store today, and in the first half of this year, about 50 titles released. Now, if you compare that to the PC gaming market, and if you're familiar with Steam, which is another distributor of games, but specifically for PC gaming, they are the majority market shareholder for being a distributor of PC games. They have roughly 10,000 total titles, and they have been in the market much longer, but they also have 900 releases per month. So within 2 weeks on Steam, they have the full catalog total of what the MetaQuest store has. So you can see there's huge discrepancy in terms of the games being brought to market in a particular category. And so what that's really opened up is this opportunity for the right players to fill in these key positions within the content ecosystem. And what we mean by that is, first off, the opportunities in place so that the headset partners are obviously looking to fill that gap. They would love to have more and higher quality titles filling out their store to try to keep adoption high and retention. Now, one of the ways to do that is to get VR studios to create games. But one of the problems is those VR studios need to find people to fund their titles. But in the current ecosystem of flat screen gaming, the XR industry is still relatively too niche for the AA and AAA market. Now, what that means is, many of the incumbent game publishers, what they're really focused on heavily is making games that can effectively hit billions of dollars in revenue in franchises, or very high hundreds of millions. And so, in the grand scheme of things, while we have select games doing extremely high revenues in the Quest Store and in other VR platforms, the sort of average of it isn't quite high enough for anyone to take that risk in the more traditional gaming sectors. And then today, if you take a look at what's available, there are only 3 or 4 XR focused games publishers, us being one of them. So our solution is exactly that. It's to bring more high quality games to market, effectively de-risk through strategic partnerships. And the 3 key pillars that we focus on are acquisitions, development, and partnerships. So what do we mean by acquisitions? First, what we mean by this are the acquiring the publishing rights to games of third-party studios, effectively giving us the ability to market and sell games from third-party studios via funding their titles. Um, and also the ability to either make investments in and or outright purchase studios that are interesting to us that can deliver on high quality products. This pillar is very interesting to us. It offers us higher frequency output because, again, we can obviously spread our investments around so that we can get more titles out to market quicker. Generally speaking, it's a shorter time to money. Most games that arrive to us are somewhere in flight in production already and are looking for finishing funds or something of the sort. But again, much quicker than starting from scratch. There's far less risk in publishing, just due to the fact that we're not carrying the burn rate of most of the employees. And in addition to that, we're able to tranche out payments over a long period of time. Furthermore, we actually like to use this as an opportunity to test the relationships. So, as a first step into publishing, we get a chance to know not only the studio, but the efficacy of their games. And then, if that works out, then we like to graduate them to an M&A. So for development, we're primarily talking about the development of our own IP from our own and operated studios. Obviously, owning IP outright gives us many opportunities to exploit those rights downstream. And also, obviously, having big IP is great because you get the highest margin in the business and just more opportunities to do fun stuff with that IP. And from a partnerships perspective, which we've been doing a lot more of recently, is the goals there are to subsidize development by getting production costs paid for by headset partners. In addition to that, getting marketing by subsidized effectively through built-in audiences. And that's exactly the focus here. For headset partners, where we're able to acquire game development funds. In addition to that, because of their investment, they're obviously highly motivated to promote us. And being storefront with the headset partners is obviously a very lucrative place for us to be in terms of sales. Additionally, the intellectual property partners have built-in audiences who are eager to play games about their favorite worlds and characters. So where are we today? So from an M&A perspective, fairly early on, we made the majority investment into Moon Mode, where we have 56%, and they are the creators of a game called Space Folk City, which is part of our lineup. And we also made a minority share acquisition to Odd Raven, who created a title called Carly and the Reaper Man, which is also part of our lineup. And both studios are in development of their own initiatives. So where are we today from a third-party publishing perspective? So we are targeting roughly 4 to 5 titles for launch in 2023. The difference between the 4 and 5 really just depends on the size of the investment in the game. The larger the game will go into maybe a smaller amount, but depending on the sizing. And we've already made one announced for to be released next year. We are currently working our way through a full pipeline of opportunities for us to work through. And today we've actually looked over 300 titles. I think one of the things I want to throw out there is that this isn't a game of scale. We're not trying to close as many as humanly possible as quickly without any filter. We do have a framework in place to make sure that we can maximize the ROI. We look for product market fit. We look for quality, while subjective is something that we need to get hands on and feel confident in ourselves. We look at the studio and measure out whether or not they can actually execute on the vision that they have. We go through pretty significant P&L forecasting to make sure that we do believe that the business model around these games works. And then we just have to get into what we always have to get into in terms of terms and negotiation. And on the right here, you have a really loose funnel that we just wanted to show you in terms of how much effort and time actually has to go into effectively us having the amount of titles that we want for the coming year. So a significant amount of work goes into it, just to make sure that we have the right titles for our portfolio to make sure that we're successful. In addition to that, we talked a little bit about our own and operated titles. So we do have award-winning development, and I believe across the titles that we have today, we have, I believe, over 13 awards and nominations. So Juan's Alliances here on the far left just launched at the very end of June, and the rest of our titles have been basically launching since 2016. We went from roughly one release every 2 years to a release a year, and now next year we're hoping to release 4 or 5 games. So significant increase in output from the company over the years. And it's important to note that our own and operated game sales, the porting contracts associated to those game sales, and the game subsidies received to be able to develop those games have generated a majority of our revenue as a business today. And in terms of partnerships, we're fairly public about the partnerships we make and when we close those in, though that's not everything. Just a few samples of the things that of the deals that we've had with some partners. And then on the intellectual property side, which we don't speak about as often, part of our goal is to work very closely with existing AAA game distributors and publishers, in addition to some of the big blockbuster TV and film providers, to be able to bring some of the best-in-class fan love content to the VR ecosystem. So our desired results by doing all this is, our feeling is that by filling the content gap, when the XR market finally reaches the potential that it seems all the big tech and major research firms and the consumers feel like it's going, our goal is to become a household name for XR adopters. We believe we can have a portfolio of IP that is extremely high value and native to the XR space. I like to think about this in the same way that you might think about Mario or Halo and their sort of effect as sort of key brands and consoles. We want to have a network of world-class production studios. We're going to have our own IP, and we want those exploited well. And we also never want to stop inventing and creating new IP for fans to love. And obviously, a big part of this is having a strong catalog of titles that can drive a baseline of ARR for our company. And finally, a large, loyal customer base that we can activate. Having the sort of first-party data and information audience to allow us to subsidize our marketing costs and provide better services for our third-party partners and ourselves. So from an execution perspective, that's me on the left. And then Frida, who is our CFO. She's been in the gambling industry for roughly 17 years with deep experience with public companies and finance strategy generally. Maeva, who's our head of publishing. 20 years industry experience specifically in video games, and then Annika, who is the head of our flagship studio, Cortopia, who is our head of studio and is a absolute whiz at building phenomenal teams. And from a board perspective, we have Mikhail, who's also co-founder with Ricky there on the far right, Eric, and myself. So I'll stop there, and happy to be fielding any questions anyone might have.